August 2024, question number 3. The following trial balance was extracted from the books of Hibiscus Limited as at 30th June 2024. We have ordinary share capital of 100 shillings each, 12% preference share capital of 100 shillings each. You see that candidates, these are very unique to companies. Share premium, 10% debentures, accounts payable, accounts receivable, sales, purchases, discount allowed, discount received, freehold buildings, furniture and fittings, accumulated depreciation for freehold buildings and furniture and fittings, inventories, returns inwards, returns outward, rent expenses, selling and distribution expenses, bad debts written off, allowance for bad debts, allowance for doubtful debts, administrative expenses, retained earnings, goodwill, bank overdraft. That is the trial balance. Additional information, number 1, depreciation on non-current assets provided on straight-line basis at the following rates: freehold 20% per annum, furniture 12.5% per annum. Number 2, as of 30th June 2023, accounts receivables included 130,000 shillings due from Johnson Wetu, who has now been declared bankrupt. It has been decided to write off this debt as a bad debt. Number 3, the allowance for doubtful debt as at 30th June 2024 is to be adjusted to 10% of accounts receivable. Number 4, rent expenses prepaid as at 30th June 2024 amounted to 52,000. Number 5, administrative expenses accrued as at 30th June 2024 amounted to 95,000. Number 6, the company paid the interest on debentures for the year ended 30th June 2024 on 31st July 2024. 7, as at 30th June 2024, inventory was valued at 7,280,000. Number 8, the company directors proposed that the preference shares dividend be paid and dividend of 10% of the ordinary shares be paid. Number 9, corporation tax is charged at the rate of 30% of the net profit. Required statement of profit or loss for the year ended 30th June 2024. Now, candidates, you can see, apart from the first 4 items in the trial balance, the rest of the items, apart from goodwill down there and the retained earnings, this trial balance is not different. The items are not different fundamentally from the ones for the sole proprietorships and partnerships. So what's the name of the company? The name of the company is Biscuits. Is it Biscuits? Biscuits. Hibiscus Limited. So let us first prepare the statement of profit and loss account. We have to write the name of the company at the top, This is Hibiscus Limited. Hibiscus Limited. Statement of profit or loss for which year? For the year ended 30th June 2024. So we'll have two columns for the amounts. The amounts are in thousands. So we have to begin with the sales. Then we deduct the cost of sales. And the sales appear on the credit side of the trial balance, 724 million. Sales, 724 million. If we have sales returns, we deduct, and sales returns should appear on the debit side of the trial balance. So look at the debit side of the trial balance. Do we have sales returns? We have returns outward. We do not have returns inward. Do you have it? No. Then deduct cost of sales. How do we calculate the cost of sales? We check the opening inventory. We add purchases. If you have carriage inwards, we add it to that. So what is the opening inventory? Opening inventory is shown in the trial balance on 1st July 2023, 54,600. 54,600. Purchases should appear on the debit side of the trial balance. Purchases. Just below sales, you have purchases, 548,600. 548,600. We check for carriage inwards, which is an expense and should appear on the debit side. We have carriage inwards. We have carriage inwards. We add here. We have carriage inwards. There's no carriage inwards, but we have returns outward. We deduct purchases returns or returns outward. Returns outward is on the credit side, 10,400. This we deduct. Then we deduct the closing inventory. Closing inventory, we check from the additional information. We have the closing inventory. The closing inventory, we have it. Closing inventory, note number 7. As at 30th June 2024, inventory was valued at 7,280,000. 7,280,000. That we have 3 zeros at the top, so it's just 72,80 deduct. Then we check for any other information that is affecting the trading account. Do you have it? No. So give me the cost of sales. What is the cost of sales? We deduct cost of sales from sales. whatever we get here is the gross profit. George says 58, 55, 20. 58, 55, 20. 58, 55, 20. So what is the gross profit? Deduct cost of sales from sales, 138, 480. 138, 480. So up to that point, that is what we call the trading account. This is the gross profit. Sometimes it may be referred to as the operating profit. We then check from the information given, do we have any other income? Now, to check if there is any other income, we just look at the credit side of the trial balance, because incomes have credit balances. So incomes would appear on the credit side of the trial balance. Do you have any? Like discount received? Yes, on page 1 there is discount received, 1690. Discount received, 1690. This is an income. It increases the gross profit. Give me the total income. That will be the total income. From the total income, we deduct the expenses. What's the total income? 140, 170. 140, 170. We move to the expenses. Now, the expenses, candidates, we have expenses that we are going to pick directly from the question and record under expenses. We have expenses that have to be adjusted. The expenses that we need to have a working for. And these expenses will appear on the under additional information. Like note number 1, we read additional information that depreciation on current assets is provided on straight line basis at the following rates. So that we have to get a working for depreciation. Workings. Show your workings. So this is the working for depreciation. The first non-current asset that is depreciated is freehold buildings. Freehold buildings. The policy is to depreciate these non-current assets on straight line basis. So we are going to apply the 20% on the cost of freehold buildings. So we get 20% on the cost. Where do we get the cost? The cost is on the debit side of the trial balance. So freehold buildings, you can see, is 165 million. We need to check if there is any disposals or additions under additional information. If there is any addition, we add to the 165 million. 165. If there is any buildings that were purchased, we add. If there are any buildings that were disposed of, we deduct. I don't seem to find any under additional information. So 20% of 165 million, that is the depreciation for freehold buildings. The rate for furniture and fittings, furniture and fittings, the rate is 12.5%. We apply it on the cost. The cost is shown on the debit side of the trial balance, 83.2 million. 83.2 million. So give me the values. John says 33 million. 33 million. So depreciation on freehold buildings, this is working one, 33 million. So these three zeros, the other three zeros, the amounts are in thousands, so we omit the three zeros because you have the three zeros at the top. Furniture and fittings, what is the depreciation for the year? 10,400. 10,400. So that is the first expense. In note number 2, we read, as at 30th June 2023, accounts receivables included 130,000 shillings due from John Wetu, who has now been declared bankrupt. It has been decided to write off this debt as a bad debt. Cumulative depreciation will appear in the statement of financial position. We'll come to that. When we'll be preparing the statement of financial position or the balance sheet, that's where we record accumulated depreciation. And please note, George, that we are preparing the statement of profit or loss for the year. For the year. For the year. For the year. This is 1 year. During this year that ends on 30th June 2024, which began on 1st July 2023. So depreciation or any other expense that we are going to record here, these are expenses related to that 1 year, 1st July of 2023 to 30th June 2024. So these sales, for example, these are sales for the 12 months. These are purchases that were made for the 12 months. These returns outwards relate to the 12 months. This discount is within that time frame of 12 months. This total income is the income that was generated within that 12 months. And therefore, even depreciation, this is depreciation for the year. It is an expense for the year. That's why the information note number 1 we read, depreciation on non-current assets is provided on a straight line basis at the following rates. Look at the rates. We read rate per annum. That is rate per year. So we are only picking the depreciation for 1 year. You understand? So the expenses are just for 1 year. For the accumulated depreciation, that one we will deal with it in the statement of financial position. So that is the first expense. We are moving to note number 2. We are, first of all, candidates here, recording the expenses that need adjustment. We have others that do not need adjustments, and we'll come to that after we've dealt with all the additional information. So we are doing it step by step. Number 2, we read, as at June 30th, 2023, June 30th, 2023, accounts receivables included 130,000 shillings due from Jane Wetu, who has now been declared bankrupt. It has been decided to write off this debt as a bad debt. Yeah, are you following? So we'll have a working for bad debts. Bad debts. Working, this is the working number 1, depreciation. Working number 2, bad debts. So we're going to open bad debts account. Then we'll open accounts receivable account or debtors account. So what is the balance on the accounts receivable? Accounts receivable balance on the trial balance. Trial balance. Accounts receivable. Accounts receivable is also known as debtors. What is the balance? What is the balance? Accounts receivable. 1, 2, 3, 4, 5, 6. The 6, 7. The 7th item there. The balance is 42,900. So this is an asset. So the balance brought down has to be on the debit side. It's an asset. 42,900. Now included in this amount is a debtor. Let me read what was written. Known as John Wetu, who has now been declared bankrupt. So the company sold to Jane Johnson Wetu is now unable to pay because he's bankrupt. You know what it means to be bankrupt, candidates. Some of you know what it means. And you know it not through the dictionary, but maybe practically. Because personally I know bankruptcy, not through Oxford Dictionary, but practically you know what it means. Not to be able to pay debts as they fall due. Right? A bankrupt business or person is one who is not able to pay his dues when they fall due. And in third world country, that one is a thing that very common. And John Wetu found himself in that position. Okay? Goods were sold to John Wetu 130,000, but he is not able to pay. So if a debtor is unable to pay, then we have to reduce this amount. We should not have this figure at this value because it has 130 bad debt, 130,000. So we credit this account and debit bad debts account. Accounts receivable 130. You see that? That we need to check before we do that. Did we have any balance on bad debts account? Check from the trial balance. Do we have bad debts? Yes, we have bad debts account. So first of all, we need to debit the 520 here. Balance brought down. Apart from Wetu, Johnson Wetu, there are also other bad debts. So we credit that account you debit this one with accounts receivable 130. You see that? Then the balancing figure here we take to the profit or loss. This should be, is it 280? Is it 280? Or is 520? This is 520. It's 520, then this is 650. Get 650. So take 650 to the profit and loss account. Credit this account, debit P&L. Bad debt working to 650. 650. That is note number 2. Note number 3, we read the allowance for doubtful debt as at 30th June 2024 is to be adjusted to 10% of accounts receivable. Is to be adjusted to 10% of accounts receivable. So it's important to check the dates and take the instructions. This is an instruction. The allowance for doubtful debts. So first of all, we check in the trial balance. Do we have that item? Allowance for bad debts. Yes, we have it. Allowance for doubtful debts is 2340. So let's first open the provision for bad debts account. So we have a balance on that account. The balance is on the credit side. Do you see that, candidates? Allowance for doubtful debts 2340. It's on the credit side. Do you see that? It is on the credit side. Balance 2340. This is 2340. Then what do we read from note number 3? The allowance for doubtful debt as at 30th June should be adjusted to 10% of accounts receivable. So we are going to adjust this balance at the end here. The end is here. Balance carried down. Please pay attention. This is where students make mistakes. George, pay attention. The balance allowance for doubtful debts, the 2340 in the trial balance, that is the balance at the beginning. Just the same way, in the same account, please give me a question. Look at the question paper. The question paper. You need to get the dates right. Trial balance. Musa, you are just coming and walking away. Now, look at that trial balance, candidates. I want you to see the dates on inventory. Do you see the date on inventory? That date on inventory, you can see it's on 1st July 2023. Do you see that? The inventory, that is the opening inventory. Because the first day of this accounting period is 1st July 2023. It ends on 30th June 2024. Please note the dates. So inventory, you can see in the trial balance is opening of the accounting period. The same page you can see we have retained earnings. Look at the date. The date is 1st July 2023. those are just few accounts. The rest of the accounts, candidates, are balances at the end. But the provision allowance for doubtful debts, it is not shown in bracket. But the date, please get an understanding, anytime you have allowance for doubtful debts in the trial balance, that allowance is the beginning of the accounting period, just the same way we have inventory and retained earnings. But you see here the examiner did not show it, but you need to know it from today. That is the rule. That is always the beginning. Then towards the end, that allowance is adjusted, and that's what we are now doing, following instructions from note number 3. Look at note number 3. The allowance for doubtful debt as at 30th June is to be adjusted. At the beginning it was 2340. Look at the board. Provision for debts is the same thing as allowance for doubtful debts. So at the beginning the balance is 2340. At the end, what does the note state? The allowance for doubtful debts as at 30th is to be adjusted to 10%. 10% of what? 10% of accounts receivable. Of accounts receivable. You all know, candidates, this of means times, so we can just replace it with the multiplication sign. Are you comfortable with that? So what we need now is the accounts receivable. So we take the 10% multiplied by accounts receivable. Now pay attention again. Pay attention. Attention. Now the accounts receivable should be the balance of debtors at the end of the accounting period. Please pay attention so that in the exam you don't lose these marks. Anytime you are to adjust the allowance for doubtful debts at the end, you take the rate that is provided, then you apply it on the accounts receivable or debtors at the end. And you see, candidates, the accounts receivables at the end is in the trial balance 42,900. Look at that, please. The first page, accounts receivable. Can you see 42,900 just below accounts payable? That is the debtors. But you see that 42,900 is not an accurate amount, because in note number 2 we read that included in that amount was a 130,000 shillings due from Johnson Wait, who had been declared bankrupt, and we had a working here. So we deducted the 130 from this 42,900. So the balance here at the end is what we need to calculate the allowance for doubtful debt. So give me this balance. $42,900 minus 130. $42,770. $42,770. So that is the correct amount of accounts receivables, and it is this accounts receivables which will transfer to the statement of profit, to the statement of financial position. This will go to the balance sheet. So then the 10%, we have this 10% times 42,770. Do you see that? So it's just 4277. So it's 4277. This is the provision for doubtful debts. 10% of 42,770. Now look at the board, Ian. Look at the board. This is the right provision. At the beginning we had 2340. At the end we have adjusted it, and you see it's an increase. This is an increase. It has increased from 2340 at the beginning. At the end the provision is 4277. So we have an increase. Give me the difference. It has increased by how much? $1937. This is what you take to the profit and loss. So this we close it. 4277, 4277. There are times, look at the board, there are times when the balance is a decrease, so that is written on this side. And should be treated differently. Now if it is an increase, given that this is an expense, then we write it under expenses. So this is provision for bad debts, or allowance for bad debts. That is working number 3. The amount is 1977. Let me show you something. If it was a decrease, for example, if the provision, this we have seen is 2340, at the end is 4277. If at the end it was to be, say, 1000, you see that is a decrease. An expense has decreased from 2340 to 1000, and the difference here is 340. This still we take to the P&L, but not under expenses. We'll add it to the gross profit, because an expense has reduced. If it increases, is an expense. If it reduces, you show it as an income. This is a provision. And during our time, candidates, right now you are doing the vertical, but if you are to do the P&L, look at this. If you are to do this P&L in a horizontal format, you know, here we have the sales, and then we have cost of sales, we have expenses. On this side you have incomes, we have expenses. So what happens if you are doing a horizontal format? If it is an expense like 1937, it's just a double entry. You credit this account, then debit under expenses. But if it is an income like this one, you just debit this, then the corresponding credit entry will be to just put it under gross profit there. That is provision. Double entry. Debit, credit. Credit, debit. But I hope you've understood that if it is an increase, if the provision increases, that is an expense. You show it under expenses. If it decreases, treat it like an income, you record it under the gross profit. So that is note number 4. Number 3. Number 4 is rent expenses prepaid as at 30th June 2024 amounted to 52,000. So we come here and open rent account. This is working number 4. We check from the trial balance. Do we have rent expenses? Yes. You can see it's on the debit side, 16,900. When the rent was paid, the bank account was credited, rent account debited. So we write here bank 16,900. 16,900. Then we read in note number 4, rent expenses prepaid. That means, and look at the dates. When you are making these adjustments, please pay attention to the dates. The dates. Look at the date. The date is 30th June 2024. That is the end of the accounting period. That means included in this amount, we have 52,000 prepaid. That means part of the 16,900, we have 52,000, which is meant for the next accounting period. Prepaid. The company paid rent in advance. It paid rent for the other accounting period. And we recall we began by saying that we only record expenses for this period. So that means we have to deduct the 52,000 from 16.9 million. And how do we do it? We credit here balance. This is the balance at the end, 52. If it was accrued, that meaning not paid, then would have debited at the end. There are times you may be told that it was accruing at the beginning. If it's accruing at the beginning, you don't write it here. You have to write it at the top there, because this one, that is prepaid at the end, we debit. The next accounting period, it will appear on the debit. This balance comes down here. So that tells you that prepayments, expenses that are prepaid at the beginning, you debit. At the end, you credit. So what's the balance on rent account? What is the balance? You need to be very careful, because I am suspecting you wrote 52,000 or something. And you need to be very keen with the zeros, because we have zeros at the top here. We have zeros at the top. The information given in the trial balance, zeros are at the top. The information given under additional information, you are given the full amount. So when you are adjusting, make sure you omit the zeros. And that comes with practice, candidates. Practice. Make sure you don't forget that there are zeros at the top. Zeros at the top. So this 52,000 under additional information, you don't write it in full. You omit the 3 zeros, because here we have omitted the 3 zeros. And if you are uncomfortable, you can just be doing the whole amounts, but that then wastes a lot of time, which is very critical in exam. So rent, this is rent working number 4, rent working 4, 16,848. We move on to additional information number 5. Administrative expenses accrued as at 30th June 2024 amounted to 95,000. So we'll open admin expenses, working number 5. Admin expenses account. Do you have admin account in the trial balance? Yes, the third last item is admin expenses 7280, bank 7280. Then we read in note number 5 that these expenses accrued at the end. Accruing at the end, we debit at the end. Balance carried down, the amount is 95. You see, I've omitted 3 zeros. It's 95,000 because I've omitted 3 zeros in this amount. So what is to be charged to the profit and loss account? Is it 73? 75? Is it 73, 75?